Welcome to the Deep Dive. Today we're digging into the Lotusbee Market Digest for July 22nd, 2025. Our goal here is simple. Cut through the noise, grab the key insights from today's market action for you so you stay informed without getting bogged down. And right off the bat, what's really jumped out at me looking at the digest is how the market just seemed to, well, shrug off some pretty negative headlines.
Yeah.
What's your first take on that? Is it just ignoring the bad news or something else going on?
Yeah, it's a great starting point. It really highlights today's theme, I think. We saw a pretty strong display of market resilience. Despite some obvious headwinds, the big indices, they mostly held up. The S&P 500 actually managed a small gain, maybe 0.1%, hitting a new record, around 6309.6.
Another record, okay.
Yeah. And the Dow Jones, it was up to about 0.4%, near 44,502. Now, the Nasdaq Composite did slip a little, maybe 0.3 or 0.4%, hovering around 20,892.
Still very close to its all-time highs, though.
Exactly, not falling off a cliff. And look at the Russell 2000, the small caps. They show some real strength, gained about 0.8%, up to around 2,248.8. So yeah, the overall trend, still bullish.
That broad strength is fascinating, especially like you said with the headwinds. Let's unpack some of the individual stocks, the gainers and losers in the S&P 500, because I think that really tells a story about what the market is paying attention to and what it's choosing to ignore.
Absolutely. So on the plus side, you had home builders, D.R. Horton, Polta Group, Taylor Morrison. They all jumped. Strong Q2 results reported there.
Suggests some confidence in housing, maybe?
Seems like it. And healthcare as a sector did well, up about 1.3%. But here's where it gets really interesting, tying back to your point about shrugging things off. General Motors. GM dropped, and dropped significantly, like 6 to 8%. Why? They blame tariffs. A huge potential hit, $1.1 billion to maybe $5 billion.
Okay, tariffs, that makes sense for a drop.
Right. They actually beat their profit estimates for the quarter.
Wait, they beat profits but still dropped that much because of tariff fears?
Exactly. It shows how much weight those trade concerns carry, maybe overshadowing current performance. And it wasn't just GM. RTX, that's Raytheon Technologies, they slipped about 3.9% after cutting their profit outlook. Lockheed Martin, profits plunged like 80%, and the stock went down. Even Coca-Cola beat their profit forecast, but the stock still fell maybe 0.8 to 1%.
Right. Those beat but fell situations are always telling. It suggests the market is looking past the headline number, maybe focusing on guidance or broader worries.
Precisely. It raises that question, what are investors really reacting to?
Yeah. Okay, so beyond those big S&P names, any other specific stocks that caught your eye? Any big movers?
Well, Tesla was up about 1.4%. People watching that one closely ahead of its Q2 earnings, obviously one of the Magnificent Seven. But the really explosive moves. Air Test Systems. It's a chip equipment maker.
Related to AI demand.
You got it. Landed a big AI-related order. The stock surged like 20%. And then there was Medpace Holdings, clinical research company. They spiked an incredible 54%, 54 on strong earnings.
Wow, 54%. Okay, so there's definitely still appetite for growth stories, especially in specific sectors like AI and healthcare services.
Definitely shows focused investor interest. And, that mix of sentiment also plays out when you look at crypto and metals. Bitcoin was trading around $119,000, maybe touched $120,000.
Yeah.
Closed up about 2.7% for the day. Still kind of stuck in that 116K to 120K range, though.
So consolidation mostly in Bitcoin. What about altcoins?
A mixed bag, really. Some like FIDA and Playbucks saw double-digit gains, pretty volatile.
Yeah.
Others like Magic Eden, Ethereum, Pow, they were down. But metals, that was interesting. Gold climbed over $3,400 an ounce. That's a 5-week high.
$3,400, okay. What's driving that?
Mostly a weaker dollar and lower bond yields, classic drivers for gold. And silver surged too, about $39 per kilogram over in India. That signals clear safe haven buying.
Right. And the miners followed.
Yep. Precious metals miners like Agnico Eagle, Wheaton Precious Metals, they hit fresh highs too, so money flowing into safety assets.
Okay, so let's try and tie this all together. We've got record highs for the S&P and Dow. Despite these big negative stories from GM and Lockheed, we have strong small caps, tech just pausing, gold and silver surging. What's the big picture takeaway from all this?
Well, the most striking thing, as you said, is how these trade war fears, the tariff impacts, they really dominated the headlines, the sentiment. GM's huge tariff warning, Lockheed's profit dive. Those are serious bearish signals. And yet the broad market, particularly the S&P and Dow, just absorbed it, powered higher by tech resilience, small caps, healthcare.
So is it underlying strength? Or just complacency, maybe? Ignoring risks?
That's the million-dollar question, isn't it? It could be deep liquidity finding a home or a strong belief that the overall economy can handle these specific company issues, for now at least. The Nasdaq just cooling off slightly, not reversing, that's key, suggests tech isn't rolling over yet. Meanwhile, crypto's holding steady, and metals are rallying. That does signal some investors are hedging bets, seeking safety. It's a bit of a split personality.
So looking ahead, what are the key things to watch?
Definitely earnings from the rest of the Magnificent Seven. Alphabet and Tesla are up soon. Those reports are huge, not just for tech, but for the whole market vibe. And of course, trade news. Any updates on the U.S.-China tariff truce? That August 1st deadline is looming. Plus, everyone's still watching the Fed. A rate cut seems unlikely before September, so the market's juggling this optimism against, geopolitical risks and inflation worries.
It really is incredible seeing the market just absorb blow after blow, seemingly, and still push upwards.
It really is. And it leaves us with a crucial question, one for you listening. When a market keeps shrugging off bad news like this major tariff hits, profit warnings, what's it telling us? Is it profound underlying resilience? Or is it maybe, just maybe, a sign of growing complacency? And if so, what could be that unexpected trigger, the one thing the market can't just shrug off? Something to think about.